undergoing. It's on now. It's one of the biggest yearly events for the tech industry and startups. And now most conversations at the half conference, half festival event start with SVB in the wake of the collapse of Silicon Valley Bank. Let's get to Yahoo Finance's Brad Smith. He's attending, he's in Austin, and he's trying to get a sense of where VCs are putting their money, or are they putting their money anywhere right now? Like, I wonder if there's been sort of a freeze, even though there's a lot of pitching going on, as you told us yesterday. I wonder if VCs are being more careful right now.
Yeah, they indeed are, Julie. And this morning, as we're posted up on what is the most musical part of Austin, Texas, on the infamous 6th Street, it is not music to anyone's ears who's checking in on what's taking place within this banking crisis and SVB specifically. But we've been able to get the vibe of some of the VCs here that are at South by Southwest. And one such VC who we spoke with, Josh Wolfe, who is the managing partner and co-founder at Lux Capital, he told us that the vibe here, and for VCs specifically, the pendulum is swinging on the FOMO days of venture capital here. Now, one of the things that he did tell us is that they are still being extremely judicious about the companies that they invest in. They're looking across everything. Is your model recession resistant? Is your technology actually something that's innovative, or is it iterative? And so within all of that, he gave us a little bit of what he expects within this reversion that VCs are tracking right now. And here's what he had to say.
I think some of it is a natural reversion, what we call the excess of excesses that were occurring in recent years. I think some of it is also people just saying, wait a second, this has been absolutely crazy, let's have a reset. But I do think that the next few years are probably in venture capital going to be the best vintage years in the past decade. Why? You've got lots of firms that know what they're doing and their reputations are rising and their access and their networks are growing at a time when prices are coming down. And when prices go down and valuations get lower, your future returns, if you're right or lucky, can be very high. So very optimistic for the future of venture.
And so even within this, he went on to say that I think that there's going to be a lot of pain for the next 2 years, and that most likely we're going to be in the equivalent of a Q3 of 2000. Now, he went on to really lay out the playbook for some of the venture capital community out there, and this could have big impacts for a lot of the companies that are trying to get their pitches in front of the rooms with the dollars that are dispensable here. But what he eventually went on to say was that you had 2 years of range-bound, high volatility markets that were declining. You saw the rise of long-short hedge funds. You think of names that we know today like Bill Ackman, Dan Loeb, even Jim Chanos. And you're going to have a next generation of players that are great stock pickers on the long side and the short side. And you're going to see a great new generation of venture investors that have really high governance and really high expectations for their companies. And so what it boils down to here, and what so much of the conversation has really been among the VCs as well as those companies that are going through their pitches here to the money that is disposable, and those investment dollars at the end of the day that are going to be more judicious is, okay, how resilient is your company, not just over the next 2 to 3 years, as even Josh had acknowledged the fact that we are probably staring at the most telegraphed recession that he can remember, but at the same time, looking even through those next 3 to 5 years, what's the leg of growth? What's that opportunity? And generative AI, that did come up in our conversation, but he's looking for the companies that have language learning models and are able to build on top of and monetize their models even more so from here. So that's really kind of the connection or the intersection of what's taking place in the conversations between VCs and a lot of these startups that have made their way here to Austin, Texas for South by Southwest as well.
Brad, really interesting there, because you were talking about the historical analog of the dot-com bust. We were just talking about that with Bill Smead here. And so, in order to look towards the future, sometimes you have to look at the past, learn some lessons. And I'm glad to hear that AI isn't dead just yet, because we had a banking crisis and forgot to talk about it for a week. Just wondering, in general, have we put the pandemic behind us? And are these companies really looking towards the future when it comes to just through that lens, which is the past is the past. We've emerged from the pandemic. We have this new economic situation in place. How are we going to manage it?
Yeah, I think for what we've been able to experience here, there is still so much investment that needs to be done, whether it's in the housing front. We've been able to speak with Icon 3D Homes, is what they build, and they've taken in about $450 million in funding to this point in time. Similarly, so for where we spoke with Eve Mobility, around the same that they've been able to take on in funding, and it's right now how they're deploying that cash to really continue investing in a lot of what is still unproven at scale. You think about being able to take an air taxi from JFK to downtown Manhattan. That's what Eve Air Mobility wants to make happen for about $100 for customers there. And then on the other side, you've got Icon 3D Home Building that wants to be able to cut down dramatically by about 2 to 3x how much people are able to build a home for through 3D printing. And so with all of that, there's still heavy investment that needs to take place. It's how proven and how much at scale they're going to be able to build out some of those ambitions that I think a lot of the VCs are going to be paying close attention to, and they have been thus far. I mean, even within Icon, they have taken funding in from Tiger Global Management, and I was able to ask them a few questions just off camera about that. But it really is looking into some of the more proven and still where regulatory red tape might need to be cut down on the aircraft mobility side, if you're taking an air taxi somewhere, where that's going to be able to provide even more opportunity for future growth, but also they're still going to need some cash, some capital to be able to ramp up the production and a lot of the vertical integration that many of them have taken on in order to fast track their own growth at this point in time too.
Yeah, it comes down to that cost of capital, but it looks like a lot of disruption at our feet here, just waiting to take place. I've still been waiting for some of these inventions for decades, so glad to see that. Brad Smith down at South by Southwest.